Ever felt that sudden cash flow crunch as a small business owner? The kind that makes your stomach drop when you're staring down an unexpected expense, a big or you can't quite fulfill, or a payroll deadline looming large. Traditional lending can feel like navigating a maze blindfolded, with endless paperwork, long waits, and often rejections. But what if access to capital was as seamless as clicking a button within the software you already use to run your business? What if the financial lifelines you need were embedded right into your daily workflow, appearing exactly when and where you need them most? So, let's dive deep into the specific embedded capital products that Fundbox offers. While they're continuously innovating, Fundbox primarily provides lines of credit and is expanding into other areas like invoice financing, revenue-based financing, checkout financing, payroll guard, and accounts payable financing. Let's break down each of these to truly understand how Fundbox empowers SMBs through embedded capital. First and foremost, the core of Fundbox's embedded offering is its business line of credit. Imagine a flexible, revolving credit line that a small business can tap into whenever needed, without having to reapply each time. This is a game changer for managing day-to-day cash flow fluctuations. Businesses often face uneven cash flow. Perhaps a large order comes and that requires upfront material costs before payment is received, or maybe there's a slow period before a busy season. A line of credit provides that essential buffer. How does Fundbox embed this line of credit? Fundbox partners with various platforms that SMBs already use. Think accounting software, invoicing systems, e-commerce platforms, or even payment processors. When a business owner is, for example, sending out an invoice on their accounting software, the embedded Fundbox integration might analyze their cash flow patterns and proactively present an offer for a line of credit. The application process is streamlined, often leveraging the data already present within that platform. This means less data entry, faster decisions, and a much more intuitive user experience. With a Fundbox line of credit once approved, funds are typically available for drawing within minutes and can land in the business's bank account within 1 to 2 business days. The beauty of it is that businesses only pay fees on the amount they actually draw, not on their entire credit limit. Repayment terms are flexible, often 12 or 24 weeks, with the option for early repayment without penalty, which further reduces costs to the business. This embedded approach makes accessing working capital not an arduous financial transaction, but a seamless extension of their existing operational tools. Beyond the general line of credit, Fundbox extends its embedded capabilities to address more specific cash flow needs. One significant area is invoice financing. For many businesses, especially those that operate on net terms, waiting 30, 60, or even 90 days for invoices to be paid can create significant cash flow gaps. Invoice financing, also known as accounts receivable financing, allows businesses to get an advance on their outstanding invoices. Fundbox can embed the solution directly into invoicing platforms. As soon as an invoice is generated and sent, the business might see an option to get a percentage of that invoice value up front. This immediately unlocks capital tied up in receivables, allowing the business to cover immediate expenses, invest in growth, or simply maintain steady operations without the painful wait. Imagine a small design agency that just landed a large project. They need to pay their freelancers and purchase software licenses up front, but the client won't pay for 45 days. With embedded invoice financing, they can get a significant portion of that invoice value almost immediately through their accounting or invoicing software, keeping their project on track and their team paid. Then there's revenue-based financing. This is a type of funding where the capital provided is repaid as a percentage of the business's future sales or revenue. It's particularly appealing for businesses with predictable, recurring revenue streams, like subscription services or e-commerce stores. Fundbox can integrate with platforms that track sales data, offering capital based on anticipated future earnings. The repayment mechanism is flexible because it fluctuates with the business's actual revenue. On a slower month, the repayment amount is lower, easing the burden. On a bustling month, the repayment naturally increases. This aligns the financing with the business's natural income cycles, reducing pressure during leaner periods. Another innovative embedded product is checkout financing. This is designed to help businesses offer flexible payment options to their customers. For example, If a B2B supplier is selling goods to a small retail store, the supplier might integrate Fundbox's checkout financing directly into their online ordering system. This allows the retail store to choose net terms or installment options at the point of purchase, without the supplier needing to manage the credit risk or collections themselves. Think of it as the B2B equivalent of buy now, pay later, but deeply integrated into the procurement process. This can be especially powerful for businesses with larger average order values, where offering flexible payment terms can be a significant differentiator. Payroll Guard is another crucial embedded capital product from Fundbox. Missing payroll is a nightmare for any business owner. Unexpected expenses, delayed client payments, or sudden dips in revenue can put a business in precarious position when payday arrives. Payroll Guard provides short-term coverage to ensure that businesses never miss their payroll obligations. By integrating with payroll software, Fundbox can detect potential shortfalls and automatically provide the necessary funds to cover payroll, ensuring employees are paid on time and the business maintains its reputation and morale. Finally, Fundbox also offers accounts payable financing. Similar to Payroll Guard, this product is designed to automatically cover other critical bills and payments. Integrating with accounts payable systems, Fundbox can provide financing to ensure that vendors are paid promptly, avoiding late fees, maintaining good supplier relationships, and preventing disruptions to the supply chain. This means businesses can manage their expenses effectively, even when cash flow is tight, without the headache of manual loan applications for every single bill. Furthermore, Fundbox's proprietary AI-powered underwriting infrastructure is a key differentiator. It leverages a wide variety of data from its partners, including cash flow data from bank accounts, payments, and invoicing transactions, along with unique platform-specific data. In essence, Fundbox is reshaping how small businesses access and utilize capital. By making financial services an invisible yet integral part of the platforms businesses already use, they're empowering entrepreneurs to navigate cash flow challenges, seize opportunities, and ultimately thrive. It's about more than just loans. It's about providing a powerful financial infrastructure that seamlessly supports the dynamic needs of the modern SMB economy. With that said, thanks for watching, and until next time.